Welcome to the 36th episode of Dividend Investing Insights, your one stop for all things dividend investing. Join us as we explore high yield shares, dividend growth strategies, and portfolio management techniques to maximize your investment returns. Subscribe now and take control of your financial future with the power of dividends. In the episode today, we will continue to look at the portfolio that we have built. However, like always, we will start with a quick recap of the markets. S&P 500 went down by 137 points to end at 5,580 points. Nasdaq too went down by 723 points to end at 17,322 points. And here locally in Australia, ASX 200 went up by 50 points to end at 7,982 points. However, as I've always said, share prices, stock markets will go up and down all the time. However, you as an investor should invest in companies that are fundamentally strong and have the ability to pay dividend not only now, but also increase the dividends in future. And that's how we have built our portfolio. So let's do a quick recap of our portfolio, and then we will see as to what is the current pricing. So we had first bought KDP, we bought 50 shares at 37.46. Then we bought JP Morgan Chase 10 at 210.5, 100 AT&T at 21.91, CVS Health 30 at 60.3, and Unilever PLC 33 at 61.32. Against this, KDP is currently trading at 33.74. JP Morgan Chase is trading at 242.85. AT&T is currently trading at 28.18. CVS Health is trading at 67.14. And Unilever PLC is trading at 59.18 for a portfolio value of 10,900. Now you would see that KDP is trading lower than our buy price. Unilever PLC is trading lower than our buy price. All three are doing higher, but does that mean that we should sell them? No, that does not mean that. We have got dividends from both these companies. In fact, Unilever PLC had paid out the dividend earlier in the week. So these are fundamentally strong companies. Now let's see. Now, while you see 10,900, that's not all. Since the time we have started building this portfolio, we have collected dividends of $159, which is available to us in cash. Last week, Unilever PLC paid its dividend for Q1 of 2025 of 15.42, which makes a total portfolio value of 11,075.16. Putting it graphically, that's how it goes. The blue line is the investment. The orange is our portfolio value. You've seen it's gone up and down a little bit, but you'll see it only moving north. I doubt if it is coming south, maybe due to some market uncertainty that comes down. However, since dividend will always be with us in our pocket, we'll see that that will ensure that this portfolio is moving more north than south. You would have noticed at the beginning of the session that both S&P 500 and Nasdaq have gone down by some points during last week. However, our portfolio has increased because these are good companies, strong companies, dividend paying companies. Anyway, let's look at what are some of the upcoming dividends we have. So KDP is going to pay out 23 cents per share, 23 cents per share on 11th of April. Again, it has maintained its dividend. It has not dropped its dividend, neither has it increased the dividend. As an investor, I would have been happier had it increased the dividend, but that's all right. JP Morgan Chase will pay out on 30th of April. And as I had highlighted last week, they have increased the dividend from $1.25 per share to $1.40 per share. CVS Health will pay out on 1st of May, 66.5 cents per share. And again, it has maintained its dividend, not dropped it or increased it. Well, that's the end of the episode. And like always, putting up the dividend investing checklist again. Use it to make your investments, go through this checklist, analyze the company, and happy investing. And see you in the next episode of Dividend Investing Insights.